Ira Epstein with your afternoon SPDR ETF video for this Thursday, and we're at February 13th, 2020, just getting on to 4:10 in the afternoon. So the big event that we have to consider is how do you position yourself, or how does you think you should be positioned for the weekend? Because remember, we're going to have this long weekend. Markets are not going to be open on Monday. We're going to get more information about the coronavirus through this, COVID-R, as they call it now, 19 actually, COVID-19. And we have to figure out what kind of risk you want, don't want. You have to make these decisions. As a chartist, what can I tell you? You're not going to be able to protect yourself in these ETFs from the close of business on Friday until they reopen Tuesday morning. So that's where you're at. Let's look at the technology sector. As you can see, the market is gone sideways here, still very much in an uptrend. You can see how you've still got the pattern of higher lows. That's where the current swing line is. And today you made a new high for the whole move at 102.05. So that's where you're at on that part of it. The market is well over the 18-day average of closes, which I use to determine bias. As long as the market is over the 18-day average, I determine the bias as being up. The 18's over the 100, the 100's over the 200. So we've been in a long-term uptrend, and you can see how this market has briefly at times gotten back to this 18-day average, but so far it's been very brief. If we didn't have this COVID-19, this coronavirus situation, I wonder where these markets would be. At this point in time, when I look at resistance, I still look at the Bollinger Band. That's this black dashed line. It's an algorithm designed to keep the market trading within it 95% of the time. Another way to look at it is when the market pulls away from it and goes up to it, it's a resistance point. And you can see what it's done there. It does not stop the market from sloping up or down once it's set into a trend. Sideways action, when you just be going sideways like that, that's a different story, but you're not in that at this point. What about momentum? Embedded. Now, momentum often travels in momentum oscillators between overbought, oversold. What I've always liked about the slow stochastic, it has a different personality. It goes from overbought, and it can either correct the overbought by dropping back down or develop what we call these numbers going over the 80 level and locking in or embedding. And when that happens, the expectation is price will try to grind higher, and the market is a buy on pullbacks till it loses that reading. That reading's still in place. So as a technician, I'm still looking at this market in an uptrend, well supported on breaks, looking for the market to continue hitting resistance. When we come to the XLI industrial sector, SPDR, little different. First of all, you're not really running in a slope like you did here. You can see the difference of the chart. You came out of this sideways action and pushed the trading range a bit further out. You're overbought, not embedded. If you get up to the upper Bollinger Band at 85.56, I'd look for rather formidable resistance, just the way it tried to do so here. But remember, when you got up to these numbers, you were embedding already here. You're not at this point. Not embedding. I look for the resistance there, but in an uptrend. In the energy sector, we had been in a collapsing stage, as you can see. I keep my eye on that embedded reading. If you lose it, and you lost it here, often that leads to the market saying the downside momentum is lost. Price might want to go back to the closest moving average above it, be it the 200, the 100, or the 18. In this case, it's the 18. It's still looking for that, and look what happened. This got yesterday, and you can see where the resistance has come in. Now, momentum is pointing up, the bias is down, and the swing line's got higher highs, higher lows. To get bullish, this market just needs to close over the 18-day average of closes, which is 5,500. You'd finish 54.87. In the QQQ, you keep running against the upper Bollinger Band, pulling to the right-hand side. It's exactly what's to be expected when you are in an uptrend with an embedded reading. So pullbacks in the market, I still think will be well supported. You had what's called a key reversal today. You made the highest high and you closed lower. Now, did you take out the previous day's low? No. If you look at the futures, you might see a little different picture here. In the emerging markets, you've got the higher lows, higher highs. Now, remember what we said, or at least what I'm saying about this 18-day average. It's the line in the sand, but it's also like the DMZ zone between North and South Korea. When a market's under it, if it pulls back, don't be surprised that it tries to find its way, if you will, stall against it on the way back up. If it's above it and it pulls back, at times it can act as the support that way. That's very typical. This market is an overbought market that is in an uptrend, higher lows, higher highs with the bias up. If the market takes out 68.85, you break that pattern. What do I think pros are stepping in here and buying it? Not in an overbought market. They're not bearish, but that's what I'm seeing. In the gold, remember I've said, I want you to think of these black lines when they go sideways. Remember, it was just what I was saying a moment ago? It's almost like you're in a pipe and you're spinning with price pressure. Often, the first challenge of the upper Bollinger Band or lower gets thrown back, and you can see how that got thrown back. That doesn't mean you're not in an uptrend. You are. You've got the higher lows, higher highs. The longer it stays sideways, the question is which way does it break out of here? Right now, which is unique about this too, is it's not overbought or oversold. When you break out to the upside, it is not uncommon that you get overbought right away or to the downside oversold. This market's just sort of in no man's land in the momentum. It's trying to turn up. I think the bulls have control going home. They lose it if you take out 147.01. If they keep it, the resistance 149.38, and if you break out of here, you can go to different levels. So it's going to be an interesting play. The gold miners, where they stuck. Remember what we just said. It's not uncommon if you get to a Bollinger Band or down a lot or up a lot for the market to just pull back to that 18-day average of closes and try to figure out what it's going to do. That's exactly what you've got in this market. You have an oversold market that developed now higher lows and a higher high. The bias is down. Close over 28.55 and you turn the bias up. You put everything to the upside. If you drop from here even under this 28.08 level, to me, it doesn't really matter. You'd have a higher high and a lower low. That's not a trend. And two levels of support, 27.80 to 77. In the Treasury, this market's interesting. You've got lower highs, higher lows with today's action. If I take off today's action, you got a higher high and a lower lows. You can see the setup right here. If the market gets under 142.99, as a chartist, that throws out a sell signal because you have the lower highs, lower lows at that point. Momentum already down and the bias would be down. Let's assume it wants to go up from here and take out 145.25 without taking 142.99. Well, you've got a divergence at that point because you got momentum trying to point down, but the bias would be up and you would turn the swing line up. Interesting. And then I'd be looking at the upper Bollinger Band for the resistance. The market today did see in the 30-year auction, by the way, the lowest auction that I think on record, 2.066. We've seen the 30-year lower than that. I think the lowest rate that we've seen on a setting during the day was 195. But it's interesting that people are so nervous about this coronavirus that they're willing to say, I'll take 2% over the next 30 years as a return. Wow. In the FXE, which is the euro currency, still a falling knife. You don't want to catch this falling knife. It's unimportant. You know, early in my career, I'd go, oh, this market's oversold. I want to catch the bounce. Well, you end up like Swiss cheese, holes all over your body. You're in a downtrend with an embedded reading. What I think happens is the first rally is probably a relief rally that people that are caught try to bail out on. But and I'm talking in the futures, which really runs how this operates. Now, something new, PODX, you know what that is. This is the cannabis index. And as hot a product as it is, and living in Chicago, you have to go into a lottery system to get into these stores. I'm laughing about it. But the industry got flooded too. And you ended up peaking out, and you're still in a downtrend. You've got an embedded reading, lower highs, lower lows, until it chooses which way to come out of that, I think the pros continue to sell this market on rallies until you lose that reading. And that's the way that I'm looking at it. And what I'll try to do is every now and then come up with one of these new charts for you that we can do. You can write me, by the way, on YouTube if you want me to take one of these off and throw that on for you. We'll use this to throw them into place for you. With that, I'm Ira Epstein, and one thing I want to tell you. You might want to consider the fact that we're going to be going on this in our, well, let me put it this way. The afternoon subscriber video should go live with subscriptions sometime, I'm going to say late February at the latest. You might want to take advantage of the free subscription we're offering to it right now. Just go to our website, Spider ETF video, sign up there. That's how you get it right now. But after that, it's going to be pay for video. So take advantage right now. It's my Valentine gift to you. You have a good day, and I will see you tomorrow, Valentine's Day. Voila. Take care.